Welcome to ALAQA, a podcast about the relationships shaping systems, capital, and the climate transition. Today, we're happy to welcome Laure Blanchard-Brunac. Laure is an expert in development finance and blended finance, with over 20 years of experience across leading European financial institutions and the European Commission. She has a proven expertise in EU financial instruments, budgetary guarantees, and investment-related policies and regulations. Laure is currently a member of the InvestEU Investment Committee and a key expert with the Trade and Private Sector Development Facility, implemented by DAI on behalf of the European Commission. She's also a senior advisor with Pedersen Public Affairs Brussels, advising private companies on their EU funding strategies. The key topics that we discussed with Laure are how blended finance actually works, where it succeeds, where it fails, and what signals show it's the right tool, the hidden EU bubble dynamics, and the systemic importance of certain individuals inside institutions. Hello, Laure.
Hello, Iman.
I'm very happy to have you on ALAQA today. And I'm particularly curious about where this conversation will go because you're our first guest with a different background. Not to say that the others had the same background, not at all, very diverse and varied backgrounds. But I'm curious to see where your policy perspective will take us. So excited for the discussion to come.
Thank you. Likewise. And thanks a lot for inviting me. That's an excellent initiative. Thanks a lot.
Thank you, Laure. So first off, I believe you heard one or two of our episodes. We like to start with an origin story, but not so much in a heroic way, like, oh, I woke up one day and this thing happened and I saw the light and I decided to fight for the cause or whatever nonsense. It's really more a discussion on the path, either personal or professional, that you took as messy or chaotic. We were discussing messy and chaotic just 5 minutes ago. As messy and chaotic as real life is, that took you to where you are today.
Yes, sure. My background is with both policy and banking. And when I say banking, it's more development finance and blended finance. So not exactly plain banking, commercial banking. So I spent a bit more than 10 years, almost 15 years doing transactions in MDBs, TFIs, Probarco, EBRD. And then I moved to the European Commission back in 2015. And there I discovered the world of the policy, and especially policy related to investment, impact investing, and blended finance. And how I landed in this area, I think it was in a way programmed for quite some time. Like you said, it looks like there was a succession of events that led me a bit pragmatically to that. But in fact, what happened is I started in Probarco. I was 23 years old, not exactly a strategic mindset or anything like this. I just wanted to travel the world. I had my diploma. Before that, I wanted to be a journalist. I wanted actually to be a war journalist. After a couple of travels around, notably Lebanon or Mongolia, I thought the world is a bit more complex than I thought as a student. And so maybe there's something to do there more on development finance more than just writing articles or commenting the news.
Which is important, though. Huh? It is highly important for democracy, for opening everybody's eyes on what's going on the ground. Very important.
It is. And funnily enough, I have a lot of peers and friends around me in the policy bubble who are actually journalists who stick to this path, and I feel extremely related to them, obviously, because that's something I always cherished. I think it's a very difficult moment to be a journalist, though, to be honest. I'm also glad I didn't take this path in the end. And also, I must say, there was a bit of a nerdy part of me that probably wouldn't have lived through the whole media domain so well. So I was always been into numbers and reading a lot. And in that case, the policy and the finance are fulfilling my expectations. And basically, when I went to development finance, it was first to learn just the job of financing concrete projects. And that's why also I moved to EBRD to see really complex, all types of financing, structuring and stuff like that. But in EBRD, the other thing that really appealed to me was the policy work and the geopolitical dimension where the bank was operating. A lot of the work we were doing as bankers was dependent on the policy conditions, the policy recommendations that were more or less implemented, or sometimes they were in the law, but then the law would not be implemented effectively. So all that work, I dived into it in EBRD, also because we were, at the time, there was this Arab Spring, so the bank was opening up to the Mediterranean region, and before that, Turkey. So I worked a lot on these countries beyond Eastern Europe. And there I moved to the Commission bubble of blended finance, which is a fantastic place to work. I learned a lot, and I never realized before there was so much to do at the EU level. And that was only the beginning, because it was with the Juncker plan. Outside the EU, it was the European Fund for Sustainable Development, which was only 1.5 billion, and now it's 13 billion. So all this grew quite a lot over the past 10 years. I'm a consultant and I work with private clients, with Commission, also on the Investment Committee of InvestEU, which is the follow-on program to the Juncker plan, and which is a predecessor of what will become the European Competitiveness Fund that we talk a lot about in Brussels, and is expected to support industrial policy in Europe.
Why do you refer to blended finance and the design of policies at the European Commission level as a bubble?
That's interesting. You picked up on that. In fact, we were discussing it yesterday in Brussels again with some friends. So you have the EU bubble, which already is quite opaque and difficult to understand when you come. There's a lot of organizations. You need to understand what's going on. And then within there, the people who are looking at blended finance and what we call financial instruments, I think this is the only place in Brussels where we actually call it financial instruments. The rest of the world call it blended finance.
Wow.
And there you have a bunch of people who are experts in that at all levels. It doesn't mean that there are very senior people who've spent their entire career working on blended finance instruments, products that the EIB or EIF have been deploying over the past 15 years. So there are a few people who actually get this topic of investment and financial instruments. And there's a sentiment, the typical policy officer that went through College of Europe, that never touched upon finance or economics even, they have a sense that this is not really for them. It's another, in the bubble, you have this relatively small number of people who are doing that job. And obviously this is growing in importance, but it still feels like an expert field. And to give you an idea, the perspective, I was really stunned when I came to Brussels. I was working on investment for broadband, for digital infrastructure. Basically, we were in a service where most of the objective was, from a competition law perspective, to ensure competition on the digital markets, rather than promoting digital investment, which can be contradictory very quickly. So there is always this thing. And the Juncker plan, the same. We were in the service for the Juncker plan, promoting investment, obviously, with the guarantee from the EU, de-risking EIB portfolio at length. And we were in a service where basically most of the staff was working as macroeconomists on the Stability and Growth Pact, looking at things from a fiscal policy angle. So absolutely nothing to do with investment support. In fact, almost the opposite in a way.
That's a fascinating field that you're opening. I have so many questions.
Okay, I'm ready.
Okay. First question. How would you describe, based on your experience, not based on what people told you, but based on your experience as a practitioner of somebody who facilitated or put together blended finance instruments, what should someone who is, one of our listeners, either an investment professional or an LP from a foundation or an LP from an asset manager, like an insurance company, for instance, what are the 2 or 3 key elements that they should pay attention to, which for you are signals that a blended finance instrument could be a solution to the impossibilities that they're facing?
What's in it for them, basically?
Yes. My point is that there are many people who are trying to reinvent the wheel.
Yeah.
I'm sorry, to put it this way,
Absolutely.
in the sense that the number of challenges, and in ALAQA, we speak about climate transition, social justice, the support of sustaining life in a resilient and, if possible, a joyful form for all, which means many things. One of the things is to put together financing instruments, initiatives, products, stories, depending on the background of the person who speaks, ideas that allow these things to happen. One of the blocks, clearly, is that these initiatives are not necessarily fit for standard financial products. Okay? They don't enter or fit exactly the boxes
Absolutely.
that are seen
Mhm.
as commercial, ventures, commercial initiatives. When I'm saying a lot of people are trying to reinvent the wheel, it's that in emerging countries, and our producer Theisa is from Brazil, I'm Algerian and French, we saw our economies and our societies develop in our lifetime in a way and a pace that is just mind-blowing, and clearly, economically, I'm speaking, which means that many tools have been activated in different countries, and you were one of these proponents and the actors of these developments in many, many ways. And you saw the use cases of what blended finance was fit for the job.
Yeah.
Coming back to developed economies, older economies, which is, I realize, at least for now, where the listeners of this podcast are from and are based in, I also realize that there are tools, financial structures, hybrid systems, you name them, whatever you want to name them, who seem impossible to put together, when in fact they have been put together in other geographies.
Yes.
So there's a sense
Absolutely.
of 50 years of development finance, which are, floating around. And that's why I was so excited to have you on the show, because you are one of the very few people who has a clear understanding of what it takes to put together, no, seriously, to put together a blended finance programs that works, to put ourselves in the shoes of the people who are listening to us. What are the one or two or three signals that they should be paying attention to when looking at a situation, a given situation? Say, oh, this is where blended finance could jump in.
What you said about the developed countries. In fact, blended finance has been around in development finance for a very long time, and there's been all sorts of trials and errors. And in fact, in developed countries, that's interesting what you said, because there was some research done for the UK government, I would say 2 years ago. I think it was LSE, and they detailed all the blended finance programs that worked and show them for the UK investment support in-house. So that's the logic. There was a little bit of that under InvestEU and the Juncker plan. However, on the Juncker plan and InvestEU, it was very much steered by the EIB weight and by the way EIB operates. But it's true that some innovations, some blended finance programs have been deployed, inspired from the developing country, from development finance, that's for sure. So one thing, when you say, when is this a solution, this blended finance type of support, the objective of this at the end of the day, from the donor perspective, is the mobilization of private capital. So if you are in a segment where there is a mobilization of private capital, which is making sense, like this is going to happen, there I would advise to strongly look at blended finance structures and leave aside the grant, like 100% grant or 100% commercial. And when I say this is what we can call frontier markets, they are not fully commercial markets. There are some market failures. We are not either in the domain where there will always be a market failure. One typical example where you have a lot of blended finance is clean tech. Because of this, because we are in a transition, hopefully, and even if the renewable energy is just here to add up to our existing fossil fuel consumption, let's hope not, but that's a scenario that is possible. The fact that clean tech is a market which is developing is a fact, but then it's still too risky and too adventurous for a lot of private investors to come and step into this. So there, the de-risking by the public money helps tremendously. Another factor where that's good to think of blended finance is when there is regulatory momentum. And this is why also clean tech is a good example, but there are other examples. And typically, what I have seen with blended finance programs that didn't perform, in fact, is often when you have the policymaker or the donors thinking, oh, we have this regulatory problem or this policy problem, but we can't do anything at the regulatory level because this is too political. So let's just throw money at it and deals. And so you can't do really a grant program because a grant program becomes again political. You have to justify inside the EU, you have to justify compliance with state aid rules, things like that. So you do the blended finance program. And that is a terrible idea. In fact, most of the time, I would say for investors, if you see that the policymaker, the regulator is actively looking at solutions, then as an investor, there's a good chance that a blended finance program will be successful and will be adding value and complementing the regulatory aspect rather than just being a standalone activity. One other thing with when is this interesting for private is...
It's funny because it's not my question. No? You keep on coming back to that. No, but it's interesting how you frame it. Because you say, when is it interesting for private? It isn't what I said. I asked, where is it meaningful? Where is it applicable? Where is it relevant for everybody, including for public money? So it's interesting that the focus of attention is put on the interests of private. Very interesting reflex here.
Yes, because I often start a blended finance program, in my case at least, mostly from the initiative of the public.
So you have to convince the private players that there's something in it for them. I understand.
But that's a funny reflex indeed. I will need probably to fix that at some point. Because typically, another point I wanted to add to this, which is a bit more what we see today outside EU and inside, it's all this geoeconomic interests. And so when I said about mobilization of private capital, we are thinking impact development first, and whether we are in developed countries or but developing a market and creating a market, etc. And I mentioned clean tech as an example. But more and more, you see that the policymakers are narrowing down their interest to some specific sectors. I'm thinking, for example, critical raw materials. Perfect example.
Yes.
Both the US, the EU, obviously China. Africa is also actively looking into it and what they should do about that and which partnerships they should go into and that kind of thing. In this area, there are things that look like blended finance but are not there yet. And one example is highly politically charged because it's critical minerals fund in Ukraine that the US announced, and nobody really know how it's going to look like or how it's going to work. You see the US, they've done a sort of board of public and private actors coming together on critical raw materials so that they coordinate better on investment. So all these things look like pointers that it's a domain where there will certainly be a lot of blended finance initiatives.
Okay. You know, on ALAQA, we focus on relationships as the levers of change. So what's one relationship in your work, past or present, that holds a particular systemic weight?
It's difficult to pick one. It's a group of people. I work for a lot of institutions. And now I'm independent, and there's a strong reason for that. I learned a lot through the institutions I work for. I met a lot of people, but I felt always constrained by the fact that you represent an institution, you represent some ideas, some line to take, if you want. In the commission, when you speak, there's line to take.
For sure.
But it's not just the commission. And why I keep on working with this institution is because, in fact, throughout my career, I met a lot of people, or we have these people in these institutions that some are there, frankly, pretty sure to block things. They are like good soldiers and they operate. And some people in these institutions are there to actually change things, make things evolve. And they take all sorts of shape or form. But there's a certain profile of people who are, I consider my colleagues and my friends, and I rely a lot on them and we exchange a lot. And regardless where we work, whether that's in the stiffest institution with a strong line to take or in a very loose environment, they will be having this ability to just get down to what needs to be done without a roadmap and be able to shape things where others see only chaos or difficulties. And that, I find it remarkable because we have all these systems of institutions in Europe, not only at the EU level, I'm thinking also...
No, for sure, even at national level.
Exactly. And these people, to me, personally, of course, but also I think for the system, are the most precious. And you can see sometimes when one of these person leave a service or the project or the things fall apart very quickly.
Ah, that's
Because you
interesting.
think,
Yes.
people think, oh, the institution is there, so this is okay and it's going to go. No, actually, it won't. It really depends on who leads the whole thing. And I'm very fascinated by this. If I had time, I would love to do academia and explore how institutional governance and the aspects could evolve, especially when they have to change quickly. They have to adapt to new realities.
It's interesting what you're saying about how some invisible threads that are held and some invisible dynamics that are sustained by a handful of individuals, as far as I understand, can make a full institution or a full project in motion. Okay, they can take it in motion in a way that feels obvious, natural. I don't know what term to use. But the minute these individuals or this group of individuals disappear or step out, step away to another project, the thing falls apart. How do you recognize these people? How do you entertain? How do you protect them? How do you entertain relationships with them? How do you identify a pattern to recognize them? Over the years, how did you do that?
Yes, it takes time. I think it takes time. And I think back to what you said about the bubble, I think that's this feeling that you need to get to know a bit the institutions and the people so that you identify. But most of these people I noticed are rather, not necessarily in public, of course, but they are rather vocal about the dysfunctions of their institutions and they
Mhm.
are not shy. I mean, without polluting the communication of their
No, no,
institution.
of course, of
They
course.
can be self-critical. And there are two aspects to me which are really fundamental. First
Mhm.
is to be result-oriented. There are lots of people in the public sector, but I think also to some extent in the private sector who are not necessarily focused on what exactly we are trying to achieve. Blended finance programs are complex projects. You always need to go back to where exactly we want to go. And in fact, I was just in a meeting yesterday in Brussels, and it was very clear from the meeting that people have different expectations. That reflects of being focused on the result. And at the same time, also not being put off by setbacks. They are at all level of the organization. That's what I noticed, which is interesting. Some people stay experts. You can have junior who are like this and director general. It doesn't matter. The common denominator of all these people to me is really that they are able to be resilient. We failed, okay, but then we go back to the drawing board and we try to figure out what happened.
You believe these individuals or groups of people are who hold such importance from a systemic perspective? How come do you believe they're focused on results when people who are practitioners on the theoretical side of systems consider that you can only contribute to movements within the systems, but you can't really identify and track the results of one action that you had onto the system? So you can put together, for example, a program for education in a given area, but you could not very clearly and with 100% certain attribution sequence or equation prove that your program had these results. They contributed to a general environment and allowed for conditions of this thing, that thing, and perhaps NGOs and parents and sociopolitical elements to flourish and therefore get the results. So what do you think of this line of having people who are results oriented, but who are also conscious of the limitations of wanting to contribute to a system's move because
Yes.
the system's change by design, it's a bit difficult to consider. What do you think about that?
Yes, indeed. There's a bit of a blurry. I think the idea is that it's better than doing nothing. And sometimes we are wrong about that.
True. Do not be nefarious. Yes, sometimes it's better to do nothing. Just
Exactly. No,
don't do anything.
there's some cases, I'm not going to name them, but yes, there's this conviction which can be, as I said, problematic in some cases, but it's just, yeah, the result is, let's say, good enough. But that's interesting what you say, because in fact, if you look at what we've been doing at the EU level, it's really a process of trials and errors and trying to fix. And it takes a very long time. And that's why people from outside are like, what the hell these guys are doing? I'll give you a very concrete example. The Juncker plan, it was 20 billion euro of guarantee deployed through EIB. It was a success on paper, huge number of mobilization of private capital, and there was really a shift also within EIB in terms of mindset and financing more risky projects, and especially clean tech, but also digital. A lot of sectors benefited from that. But still, there were a lot of complaints on exactly like you said, like, yes, the point was to mobilize private capital, but for projects that were additional and not just regular EIB project that they would have done anyway. So there were a lot of complaints that were channeled through the European Parliament in the end, and also the Court of Auditors made a very tough report on the outcomes. It's the perfect example of what you described, like we are trying to do the thing, and then, yes, it's there, it's on paper, but not quite in reality. But then when we took this into account, when we designed InvestEU, I was with the Commission at the time, so we were designing the whole thing. It took really a lot of efforts. We changed completely the governance of the program. For example, under InvestEU, there is this social and investment skills window, which was not existing under the Juncker plan. And that was really upon the initiative of DG Employment at the Commission. They were completely newbies, if you want, in our group. You had on the research and innovation, the digitalization window where I operate now, that was much more involvement from DG Connect, DG RTD, so more the policymakers for digital and innovation. The initial plan with the Juncker plan was that they were a bit out of the picture. And it took a lot of time and a lot of paperwork, as you can suspect, to get to something that actually worked better on additionality. So we improved amazingly the additionality of the program. And now, in fact, the Court of Auditors concludes more the opposite, that this is very additional and it's very complex and it needs to be simplified. And so there's been some simplification proposal going through the EU institutions and that have been approved. But what I mean is that it's a process where you're trying to change things from, and I think here, key to this is a sort of democratic process. There are some institutions that have been doing the same thing, like never reconsidered what they've done before. And I think in that case, the only outcome is that you become irrelevant at some point. And that can be a very harsh wake-up call. But in the case of what I have seen, I think on the EU side, in this specific domain, it's a lot of trials and errors to get closer to the results that you want to achieve. But it takes a long time.
Yeah. And the dimension of complexity, it's funny to see it as a flaw when, in fact, what you're saying is that the building up of the additionality was precisely allowed by the input of many, many, many more players and many, many more voices.
Yeah.
Which had obviously sometimes, I guess, diverging views on some topics.
Absolutely.
So designing or decided what is the relevant or necessary level of complexity as an entanglement of a diverse and a very complex web of relationships between topics and priorities and people and groups and organizations. So what is the necessary level of complexity to allow for this additionality versus, okay, make it as simple as possible. The additionality, yes, it will be easier to read, easier to understand for more people, perhaps, but the proven additionality may lag behind. That's an endless discussion. Okay.
I mean, it's not so endless. I think there's a realization that all these things are going to be scaled up only when we sort out, in fact, the complexities. In development finance, there's a lot of calls for standardization of blended finance instruments, which I totally subscribe to. So it's again something that can be fixed. And at the end of the day, it's because if you look at the transaction cost, which is the reality of this complexity put on the shoulders of whoever deploys these instruments, there's a point where there's a limit, especially with the budget constraint that everybody are living under.
I understand. Now, Laure, we go to the Contrarian Thoughts. So please leave a statement that will be commented by further guests, creating a chain and promoting conversations. So something that, in your opinion, people should do less, a hot take, or a topic that you keep on repeating over and over again to anybody who's willing to listen to you, dysfunction or something that you admire. I don't know.
In blended finance, this billion to trillion motto has done a lot of harm.
Okay.
If we could just bury it once and for all and just not go back to it. Basically, there are two things I see recently in our domain which are really getting on my nerves. This realization that billion to trillions is never going to happen. It's going to take a while before we ever get there. And then there's this opposite. I put it as the opposite because I think it's the other trend, like ESG is dead kind of motto that we have now. And I think these are just headlines. And the reality is not this. The reality is that obviously there's a huge backlash on ESG. We are at a moment where we realize blended finance is much more complex and difficult to scale up. There are some constraints on the development of all these initiatives. But at the end of the day, there are much more people doing this today than ever, working on this domain than ever. I think it's good to realize the limits. And if we take the example of saying ESG is dead, that's not correct because a lot of the companies and the banks are looking at climate and social and environmental risk more than ever. And the developing countries are already under a lot of stress with the climate condition changing fast. So this is not because there is some discussion in the parliament or that we should just conclude that all this is going to the bin. Far from it. It's a bad moment, let's face it, but I think we shouldn't be impressed. We shouldn't be threatened by this. And there's a long-term progress which is happening. That's my conviction.
Why do you think that the billions to trillions motto that you stated around blended finance, which I understand as in supporting widely and in massive amounts and in massive financial infrastructures, the development of all sorts of initiatives all around the world through blended finance, why do you think it's done more harm than anything?
Because words without action is a terrible thing, in my view.
Okay, so because the motto is empty.
And you say this, okay, where is the institutional setting for this to happen? We have announcements in Brussels like literally every day on everything. What matters is what's behind, what exactly, when they mean this, what concretely is available for this to happen. A perfect example, we are looking now at how MDBs could change their risk management features with the credit rating agencies. We're only looking at this now. I mean, if we were serious about billion to trillions at the time, that's like first stage, because the only institution that could ever achieve these numbers were MDBs in the first place. And then you look at the MDB risk management, their capital base, and you start from there. There's no other way around. The other thing, for example, is this saga on the GEMS data. So it's this data on emerging markets, on MDB portfolio on emerging markets. And it's been released only last year, as far as I noticed. It's been years of discussion on why this data is actually not available to the general investor base. You had to be an MDB the EU couldn't be a member of GEMS while it was hosted by the EIB. The Commission, sorry, not the EU, the Commission. So there's all this debate, and you can see if you think billion to trillions, okay, there's a work plan there that says probably the first thing to do is for investors to know more the markets they would be investing in. And that hasn't been done in a comprehensive and organized manner at all. So that's where I was coming from.
I understand. Thank you. And now the last part. So that's the flash round, which means big questions, short answers. First one, a question you wish more investors would ask.
They ask a lot of questions, though. It's a question that I think everybody in our domain should ask, and especially investors. But it's a question that I got from, I don't know if you know Paul Collier, Sir Paul Collier. He's an academic and a writer on development issues, and he's fantastic. And his speech at Oxford, he opened by saying, look, the question nobody answers is, who is going to be the last one to burn the last barrel of oil? And today, the answer we have in our world is basically clearly the richest, the Saudis that will be extracting this, or the US, or maybe, I don't know, maybe China, we'll see. But clearly not the poorest ones. While if you think from an environmental and climate perspective, it should be maybe reserved to the last resort situation where there's no other option, there's no other energy sources. And so I think that's something where you ask this question that completely changed the perspective on investment in climate and realizing that actually we are going to get to that point eventually, the last barrel of oil.
Second question, one book, music, or practice that helps you to hold the complexity?
I like what Esther Duflo writes. I particularly liked Good Economics for Hard Times, the one she wrote with her husband, because it was basically deconstructing a lot of assumptions we have in our domain, like trade is good. There were all sorts of macroeconomic mottos that we rely upon. And she was basically unpacking and saying that's not that simple. And I found this is a super interesting perspective. And another one, which probably is a bit less known, and that was really a funny one on what we just mentioned, and also the change makers I mentioned earlier. There's this book by Jérémy Guez, who's a geopolitical professor. He wrote Architect of Change. It's a very funny book, interesting from a professional perspective on how instead of seeing change as chaos, uncertainty, you can actually see it as an architect and try to organize yourself based on these new realities. And he had this image in this book, which I loved, and I often think about it when I meet people or new organizations. In a team, you need a James Bond and you need a Q. So you need a nerdy type, like that's going to do the old technical stuff, maybe less in the light. And you need a James Bond who will be all over the place and trying to reach out to people. And I just loved the image and it stuck with me.
A system you'd love to see more love for, or you would like to see more disruption in?
On disruption, what I noticed with the Bretton Woods institutions, and I'm putting there the MDBs and the IMF and the WTO, of course, and all this system, which is really under attack today. I think it's heavily disrupted, but in fact, instead of being disrupted, that would be nice to have it reformed. And again, as I said, in an organized manner as well here, rather than having these attacks and these dysfunctions that come from very strong political tensions with China, with the US, and also probably the UN will be part of the pack, because you have these institutions which are very monolithic, very complex, very difficult to move. And then the feeling it gives is that you need aggressions like disruptions like we have today, and which are really traumatic because everybody wonders what's going to happen next. If we were in an ideal world where humanity is great at what it does everywhere, I think we should be able to have more reforms of this institutional setting.
Okay, and last question, what gives you hope in the capital, or in your case, blended finance / climate space right now? What gives you hope?
We were on the way to get new institutions or new institutional setting. I'm not talking of the MDBs here, but more at the EU level with the green regulations, taxonomy, and things like that. There was a good evolution, but I think, as I said earlier, on the ESG backlash, at some point we are going to have a new institution that will be stabilizing all this. I'm pretty sure. I'm saying this, we just had the COP, which was really a huge disappointment. It's not a good moment, but at the same time, the debate is here. And you cannot ignore the question like we did 20 years ago. 20 years ago, we were not even mentioning these questions at all. And now they are on the table. They are burning questions. And at some point, there will be a moment where we will build this new institution. And I prefer to be in an uncomfortable place, but at least having a debate and knowing about this rather than being completely in the dark and ignoring these realities.
Well, thank you, Laure, for these powerful words.
Thank you, Imen.
Thank you for listening to ALAQA. If this conversation sparked something for you, share it, leave a review, and subscribe for more dialogues at the intersection of capital, systems, and transformation.